Hey guys, what's going on? Thought I'd go through some of the key levels that Stephen Brooks sent me this morning for SPX. So, for you guys that don't know, Stephen Brooks has been sending me his key support and resistance levels for that particular day every morning pre-market. And so he's letting me send them out to my subscribers. So if you want to get these levels, plus my commentary and review videos like this, talking about these levels and how good or bad they are, how well they held or didn't hold throughout the day, I'll leave a link in the description below and you can sign up to get onto my email list where we talk about things like these levels and also any other reviews and things that I do on these sites and services as well. So this morning was the 13th of June, and so Stephen sent me the 3 support levels and the 3 resistance levels, which are only good for intraday on SPX. And so let's have a look and see how they did. So I've plotted them on Thinkorswim right here. So you can see these are the 3 resistance levels and these are the 2 support levels. So I actually only plotted 2 resistance levels because, sorry, 2 support levels because the other one's so far down it doesn't really matter too much. So I did the 4320 and the 4300. And so I didn't do the 4245 because it's so far down it's not even relevant here. 4245 is way down here. Let's put it on now though, just for full completeness. So 4245, so it's like here. So these are the 6 levels, just double check them. Yeah, so we have the top support, the top resistance at 440. Yeah, so this is the top one, and then the bottom one down here. So these are the 3 support lines, and these are the 3 resistance lines. And you can see on CPI data, we gapped up pretty nicely. So we had 4% instead of 4.1%, which was the predicted. And so we gapped up and we did find some resistance at this first level. And you can see all day we just kind of hovered around, went flat around this level right here, which was the first line on Stephen Brooks' resistance, which is 4365. So resistance 1 is 4365. So you can see that's pretty cool. Like, it's pretty interesting. The big question here is how on earth do you use these levels to actually trade? Because this thing, sure, it found like it like hovered around this level, it broke under, it broke it, it broke under. It didn't do very much. It went sideways. So what do you do in order to trade this? Because are you going to buy puts every time that that you get to this level? So do you buy puts when it gets to here? Because then you'd be disappointed as we went up. Do you buy calls when it breaks it? And so that's something that's not completely clear to me yet. The main thing that's clear to me, however, is after a few days or a week or so of doing this so far with these key levels, which again you can get if you sign up in the link in the description below, I'll send them out to you every morning pre-market. My main thought here is, again, it's more about betting what won't happen than what will happen. And if you want to get a free course about that and how to sell options and win 98% of your trades, I'll leave a link in the description below. Because what I really think these levels are good for is looking at the extremes, right? So all the time that I've been doing this, and previously when I was using these levels with Stephen Brooks, is they very rarely break the extreme levels. They can go intraday and do all sorts of things around the key level or down to 1 or whatever, but they very, very rarely break the extremes. So I've yet to see one break the top resistance line, so in this case 4400, or break the line down here for the support line. So if you ignore the other levels, sure, they can be useful for me, but like obviously it kind of clung to this level. There's not much you can do if it just clings to the level though, right? You can't play off of that particularly, and I think that's what some people might want to kind of think about here and what I'm addressing in these videos. So imagine you get rid of all these levels except the 2 most extreme levels, the furthest support and the furthest resistance. Now obviously in this case we're closer to this resistance level, so what if you said to yourself, okay, I'm going to place a trade where I'm going to bet that it doesn't fall beneath this level. 1, we're way above it, and 2, it's a key supportive level that the market makers are defending like mad. So the chances of this coming all the way down, breaking it, is actually pretty low. And in order to do that, you would sell a cash secured put or some other type of sell side trade in order to make money, even if it just goes sideways like this, or even if it goes down, as long as it doesn't go below this level. And again, we have a short course which is free It's called How to Win 90% of Your Trades. And in fact, the win rate can be higher than that. It can be like 98% if you do it right. And so I'll leave a link in the description below. You can sign up for that and learn how to do these types of trades that really just rely on the underlying, in this case SPX, staying within a certain range. Now I don't think you'd want to sell covered calls here, right? Because you're already close to this resistance line. So there seems to be like there'd be more chance of it breaking up and through this resistance than there would of it breaking all the way down to the support way down here. So in this case, I didn't do this trade, but I'm planning to do one tomorrow. You could sell a put, for example, betting that it will not close by the end of day. And remember, these levels are only good intraday, so you can't really swing trade these. So the idea would be that if we open up close to a resistance line again tomorrow, there'll be new fresh levels, which I'll send out to my subscribers in the morning. The idea would be that if we open up close to the upper levels here, if we sell a cash secured put, for example, or some sort of smart spread, which will allow us to use limited buying power or minimize our buying power required, then you could actually profit throughout the day, even if we do nothing, which is like what happened here. So I think a lot of people, the tendency is to think that these lines are only for bounces, right? So this would come up and bounce off here, and you'd buy puts, and it would come all down here, and you'd buy calls, and it bounce, you know. I think these levels, I think the secret with these levels, and Stephen's going to talk about this a little bit in a future webinar, the secret is how to play them. Like, they're really effective, but being able to come up with a trading plan is kind of the key thing here. So hopefully this video is helpful. We'll talk a bit more about this tomorrow, and I'll try and do a trade tomorrow on the levels to give you guys an example. I think Lance in Sidekick or SKT Trades, he actually did a spread on these, and so I have a video about that too. So you might want to check out some of the other videos that I've been doing on these key levels to see how he played that. But it'll be a similar idea to that, and hopefully it'll be interesting for you guys too. Alright guys, talk to you soon.